Hey everyone. So if you're watching the crypto market, you know that the price charts, well, they only tell part of the story. The real driver, it's these huge, powerful stories or narratives that are basically deciding where billions of dollars are headed next. So today, we're going to break down the three biggest stories that are running the show right now. Let's get into it.
So have you ever looked at a crazy crypto pump and just thought, what on earth is causing that? Right? It can seem so random sometimes, but trust me, there's usually something much, much bigger happening behind the scenes.
And it really is all about the story. I mean, think about it. In a space this new and this wild, a good story, a believable story can be worth way more than any financial statement. It's what pulls people in, builds these massive online communities, and yeah, it can literally create billions of dollars in value, seemingly out of thin air.
And that's what we call a market narrative. It's basically the shared belief that answers the question, why are we all buying this thing? It's the engine behind the momentum. So let's get into the big three that are dominating everything right now. And we're going to start with the absolute heavyweight in the room. Okay, first up, the Binance juggernaut. And listen, when we talk about Binance, we're not just talking about another crypto exchange. No way. This thing is like a black hole in the crypto galaxy. It has its own gravitational pull that sucks everything towards it. And if you want some perspective on that, check this out. We're talking 41% of the entire global crypto market. That means for pretty much every $2 traded, one of them is passing through the Binance ecosystem. That's not just leading the pack, that's practically being the pack. It gives them this incredible power to shape where the whole industry is going.
And what fuels that power? Money. A lot of money. We're talking $150 billion every single day. That's the amount of cash flowing through their system. That kind of liquidity is what creates that gravity I was talking about. It just pulls in more traders, which brings in more money, which pulls in more traders. You get the idea.
So, what's the secret sauce here? Well, it's not just one thing. You've got these record-breaking futures volumes. We're talking trillions a month. Then there's their own BNB token, which has been hitting all-time highs, making people feel rich. And then you have these juicy staking yields, like 8%. I mean, why would you keep your money in a bank for 0.5% when you can get that? It's this perfect storm where every piece of the puzzle makes the other pieces stronger.
And here's the kicker. This isn't just a bunch of us regular folks trading. The big money, the institutions, they're all over this. They see Binance as kind of like the safe and regulated way to get into crypto. You know, they've got over 21 licenses around the world. They have all the fancy tools the pros need. It's basically the official front door for serious capital.
All right, so if you're watching this narrative, you got to mark your calendar for September 7th. That's when we get the Fed's REIT decision. And that decision is either going to be like gasoline on this fire, or it's going to be a big bucket of water. It's the next huge hurdle for the Binance story. Okay, let's switch gears to our second narrative. Now, this one is, well, it's a bit of a slow burn, but honestly, it might be the most important one in the long run. We're talking about a massive, fundamental change in how big players, I mean governments and huge institutions in the US, are starting to think about crypto. And this chart right here tells the whole story. Just look at where the institutional money is settling in for the long haul. You've got the Bitcoin ETFs, almost $144 billion locked up there. And then you see this growing line of people wanting to stake their ETH. This isn't about flipping tokens for a quick buck. This is about buying and holding. It's accumulation, plain and simple. And the signs are everywhere, if you know where to look. I mean, there's a bill in Congress to have the US Treasury hold a strategic reserve of Bitcoin. Can you believe that? Plus, the amount of ETH held by institutions has shot up 50x, 50 times just since April. All of this, plus clearer rules and the expectation of rate cuts, is creating this perfect environment for crypto to be seen as a serious strategic asset. So you can see the mindset is totally different from that fast-paced trading world. The story here is all about the long game. It's about looking at Bitcoin and Ethereum and saying, this is our generation's gold. It's a place to store value, a hedge against all the economic craziness out there. And the next big domino to fall, that's going to be the SEC's ruling on options trading for the ETH ETFs. If they give that a thumbs up, man, that could just open the floodgates. We could see a whole new wave of Wall Street money pouring in. Okay, time for our third and final narrative. And this one's the wild card, the total wild card. Forget fundamentals. This story is all about hype, politics, and pure high-stakes betting. We're diving into the world of what people are calling polyfi,
politically connected tokens, and specifically this WLFI ecosystem that's tied into some major political players.
And this is a classic tale of two cities, you know? High risk, high reward. On one side, you've got some serious growth engines. Their stablecoin is blowing up, they've got fresh funding, and obviously those political ties are a huge deal. But on the other side of that coin, the risks are massive. It's super centralized, one wallet holds almost 70% of the supply. It's a huge target for regulators, and the price can swing like crazy based on a single tweet or news headline.
So what's the bottom line here? It means that, unlike our other two stories, this isn't really an investment in technology. It's a bet. It's a pure gamble on politics and headlines. The value is completely tied to things like election outcomes and news cycles, which makes this whole ecosystem one of the most volatile and unpredictable things you can touch in crypto.
And the next big date for this story is September 11th. There's a big deadline for an airdrop, which is basically when they give away free tokens to their supporters. Events like this can cause some serious price swings, so it's definitely going to be a big moment for this whole speculative narrative. All right, so there you have it. 3 totally different stories driving the market. You've got the king of the hill, the slow and steady institutional giant, and the crazy, unpredictable wild card. So now let's put it all together and see what the big picture looks like.
This table really lays it out perfectly. First, you have the Binance ecosystem, the momentum leader, all driven by its incredible institutional-grade tools. Then you've got the U.S. strategic reserve narrative, this slow uptrend built on the promise of regulatory clarity. And finally, the WFI ecosystem, the highly speculative play that runs purely on political hype. These 3 forces are basically in a tug-of-war, shaping the entire market. When you step back, you see a market that's in this really interesting balancing act. It's being pulled in 3 different directions at the same time. You have the push for safety and institutional adoption, the pull of long-term strategic thinking, and then just the wild, chaotic energy of pure speculation. It's a fascinating mix. And all of this leads us to the one final massive question. If the Fed starts cutting interest rates and all that cheap money starts flowing again, where's it going to go? Does it pour into the Binance machine and just supercharge what's already happening? Or does it accelerate that big institutional move into things like Ethereum? Honestly, that is the billion or maybe even $1 trillion question that we'll all be watching.